You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. Be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. Welcome back to TWIFO, This Week in Futures Options, a program where the name pretty much says it all. We break down the week that was and indeed still is on the futures options side of the fence. So we're going to talk maybe some equities, maybe some gold, maybe some crude, maybe some crypto. Who knows? Who knows what the heck's going to make it on the show? My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we hope so around here, Options Insider Radio Network. I'm joined by the usual cast of characters here, plus one. By the way, if I sound a little bit different, because I'm on the road here, on the mobile studio out here, coming at you from scenic and sunny Florida as opposed to frozen wasteland of Chicago. So if we sound a little bit different, that's why. Also, if you're listening live, that's why you're not hearing the music and the transitions. That'll all be put in later for you folks listening after the fact. So you won't notice there. But on the live stream, it may sound a wee bit different. And, of course, you guys know how to get us always via the Mixlr, MIXLR, as well as via the questions via the usual platforms. We do love to hear from you guys. Let's see who we got. Let's go around the horn. Let's start off with our man, I believe, coming from Glen Ellen, Mr. Nick Howard. Nick from Bantix Technologies by way of Quick Strike. Mr. Nick, welcome back to the show, sir.
It's not so frozen out here. It's sunny, melting, so it's not too bad.
That's good. Sounds good, sir. And Mr. Nick, I think I can hear a little bit of feedback coming your way. So do me a favor, when you're not chatting, go ahead and mute. Unless that's the Rock Lobster. I don't know. We'll see in a little bit.
I was muted.
Oh,
Somebody else.
It wasn't you.
I'm not feedbacking.
All right.
You only hear me
was me,
doing
guys.
carrots.
Sorry about that.
Sean's always feedbacking.
That's true.
Sean wraps his head in tinfoil when he calls from outside the studio.
Of course, we are also joined there, as he mentioned, unfortunately not in studio, but I'm not, and there's no one in the studio right now, so he couldn't be joining us live. I'm sure he wanted to. Mr. Sean Smith, the Managing Director of Derivatives Licensing over there at FTSE Russell. Sean, welcome back to the show, sir. How are things out there, I believe, in the hinterlands of Chicago, sir?
I am in the western suburbs called Western Springs, and things are great. And, I don't wrap my head in tinfoil. That would cause all kinds of different types of disruptions. But it's good to be here again, Mark. Thanks for having me on.
Yeah, I miss having you in studio. Hopefully I'll have to get you back when I'm back in town, perhaps next week, and get you down in studio. And also joining us, I do believe this is his first time on this program, so it's kind of fun. Our old friend, the Rock Lobster, Mr. Andrew Giovinazzi from Carmen Line Capital by way of the old land of the pit. Mr. Rock Lobster, welcome to TWIFO, sir. I think this is your first time on this program. Am I correct?
It might be. I think I've done one because I remember the Quick Strike vol program. So I think I've been here before, but part of getting the senility, so I'm not quite sure.
Didn't you do this silver? Don't you have the silver risk averse on too?
No,
Isn't that you?
That's Mike. That's Uncle Mike Tusaw.
Oh, Mike.
St. Charles.
Yeah, but Andrew's been on though.
I've been on, I'm going to say a year and a half ago-ish.
Okay, well then really quickly, give us a real quick update on who you are and what the heck it is you do for our different audience here on this program.
Oh, I was a floor trader for about 15 years. I work with Mark Sebastian at OptionPit.com. I am basically the director of education. I create trading products for our clients, teach them how to trade options, and that's basically also our managed risk for Carmen Line Capital. It's our little hedge fund division. And I've been trading options off and on for 30 years.
There you go, listeners. So let's get into it. Actually, one of the reasons Andrew is joining us, let's kick things off in the precious side this week, in the old metals, as we are wont to do. And interesting stuff we were looking at. By the way, you guys can follow along with all these reports on your own time via your lonesome there, wherever you are, whenever you are. Head on over to cmegroup.com/TWIFO, TWIFO. That's where, of course, you can generate your own kind of baby scaled-down version of the old Quick Strike reports. And if you want to upgrade to the hardcore, the legit, the big boy stuff, then, of course, you want to go over to Bantix.com, BANTIX.com, or to search for Quick Strike. That's without a C, QUIKSTRIKE.net, and that's where you can log into that as well. Get the big boy version so you can see all the cool stuff we're talking about right now. If you do that, if you're fired in, if you're logged in, put the drop down to precious metals and click on gold. You'll see exactly what we're looking at here right now. By the way, I like to look at it with all the expirations, but to each their own. It's a lot of data, so they may be overwhelming to you. But I like to see everything at a glance. Nick, when you pull it up, how do you look at it? Do you look at it with all the expirations or just the main shot there?
No, we actually shortened it. It used to be we shortened it up to 6 because most of the action's taking place in the front 6. The difference there being the possibility of the weeklies and the indexes. I always keep it with 6, and then I, kind of figure out what I'm going to look for from there. But it's configurable, so you can do whatever you want. A few clicks.
I'm a glutton. I guess I like all of it in my face at once because I'm going at all the expirations. And if you did that right now, listeners, you'll see gold up a little bit on the week here, up not quite a third of a percentage point, nearly 5 handles, right around 13.27 or so, coming into show time out there. And gold vol, kind of a bit of a mixed bag, up slightly in the nearer portion of the term structure, off slightly a little bit farther out. Gold vol, as we've been saying for a while here on the show, has been kind of a weird thing. In fact, Mr. Rock Lobster, let's get to it. That's kind of the reason you're joining us on the show today, kind of a little bit of a last minute, a little bit audible column here on the show, because you were talking a lot earlier today about what's catching your eye out there from a gold volatility and indeed from a gold skew perspective. So why don't you regale us, sir? What is it all of a sudden that's got you all excited, all hot and bothered about gold volatility and gold skew, sir?
Yeah, it doesn't happen often, but every once in a while I get hot and bothered. I'm noticing just a couple of trends which I find curious. One is gold volatility is one of the few things where it's still in a single digit handle for, let's say, 30 to 40 days, kind of at the money-ish, which means usually you've got a little more upside skew in gold, like the vol goes low and skew gets a little higher on the upside. So it is creating, it's one of the few things where I realize like it's actually moving a little bit, where the market's been kind of slowing down, but gold vol's picked up as far as like realized vol. So I find that a odd disconnect, which generally means to me that makes me like a buyer. And with, I'm looking at upside ratio flies in gold right now where the return is like almost 5-to-1, meaning you risk 1 to make 5 on near the money flies, which is pretty cheap upside for gold. So you can do all kinds of fun stuff with it. So I think movement in there is relatively inexpensive. That's what I would say. So I'm looking at vol here, and I think it's just not very expensive, but maybe some of the guys disagree with me, but I think it's pretty damn low.
Well, Nick, that kind of echoes what you've been saying on the show here for a while, Nick, because we've been talking for a long time, probably close to a year, if not longer, about how gold vol is cheap and just low, and it remains low. And part of that is merited, but there are points when it does move and it tends to warrant it. Like, Nick, what's your favorite phrase there? It pays the rent, correct?
Yeah, I mean, I think that what Andrew's saying, the vol is, like, I'll start with a year. Typically I start with a year and look at that. And if I just look at 30-day, we're not at our lows in that year, but we're approaching our lows. And as far as the skew goes, we always talk about the quick skew. So we're not looking at just the call and the put difference from a volatility standpoint, but we look at the percent difference from the at the money. And although it's not the difference between the call and the put in terms of the tilt from the at the money it's not as wide as it's been over the last year, but it's well above its average over the last year. So right now the calls are about 10% richer, not 10 vols, but 10% richer. So in this case, if there's a 9 vol in the at the money, so it's about a 9.9 or a 10 vol in the upside call, and the puts are about 5% cheap, so about a 9.5. So that width is on average, the puts are cheaper than they have been, and the calls are more expensive than they have been, although they're not the most expensive they've been. So there is some interesting stuff going on there, and I haven't correlated. I can look here and just kind of eyeball it. I don't think the lowness in the vol has anything to do with the way the shape of the shape of the vol curve, what it looks like. I tend to look at it as more based on where the futures are. So I think that given, we've been down at the 1200 mark in the futures, and there's been basically the calls and the puts have been, equally rich to the at the money. So there was kind of a balance. People didn't know whether we were going to go up or down. In this case, even though the futures are on their highs from a recent standpoint, it still looks like, based on what the skew is telling us, that there's some upside available there as well. So think that I was in agreement with what Andrew said, but not the highest, not the widest gap we've seen, but still on average quite a bit above where we've seen over the last year.
It's slightly tasty. You're like, it's a little tasty.
Yeah, it's not. I mean, if you want to look at like crazy skew, I can tell you like dates. Like if we go back to just before the new year, gold skew was way out of whack, the 30-day, and then you go back to in April of 2018, we had really wide, really expensive calls and really cheap puts. And this is not, as like I said, it's not as bad as it's been. I'll tweet out this gold skew thing, so you could take a look at it. But it's not as wide, but there's still some there, because when you look at the frequency of the change, as I think the market still thinks there's some upside, probably is what it looks like. But I'll send this out and people can sort of decide for themselves what they think.
There we go. We'll share it out there, listeners, so you guys can see all the fun for yourselves. Try to include it in the show notes there as well. Mr. Rock Lobster, man, you should be searching the quick strike tools, getting the history of skew, sir. It's pretty informative stuff. It's nice. That's one of the things. That's why we like talking about gold so much on this program, quite frankly, is in terms of skew evolution, I'm hard pressed to think of another product that has as much evolution in the skew, but also trades a lot. I mean, there are weird esoteric products that trade a 5 lot a month, and their skew goes all over the place, of course. But outside of those deeper, liquid, more, shall we say, salient products to a lot of our listeners that show as much evolution in the skew, gold's up there. You'll see gold, you'll see the calls get bid, then the calls will come in a bit, and then all of a sudden you see the puts have some life, and the puts are getting bid, then it's a smile, then it's all over the place. So gold is a fun one to watch, and I don't know about you, Mr. Rock Lobster, because you deal with educating a lot of people who come in from a lot of broad equities, and then they try cutting their teeth in other products. Is that intimidating for them, or is that exciting for them when they see, because they come in, let's say they come in from an S&P, so they're used to the traditional investment skew, the puts are bid, the calls are offered, never really changes, the slope may change a bit, but that's kind of about it. Does that intimidate them when they come into a product like a gold and all of a sudden, hey, the calls are bid this week, oh, now the puts are bid, now it's all over the place? Or is that more enticing, like, the setups you're talking about now, is that they find that more attractive, or is that maybe a little bit intimidating to them?
Well, we have original teaching methods. For gold skew, we make everybody look at the screen standing on their head. And it really helps them.
I like that. That's
good. So everything you do for the SPX, you just stand on your head and you do the opposite for gold. And I think gold is a little curvier than index skew, just a little bit, just because of the shock value. But no, I think it's like learning how to trade curve is just important that it's there. Like, you have to know it's there. The fact that all that upside calls are not cheap, and it's hard for them to produce if you don't have that movement. And it is. I'm not going to say it's the same as a VIX curve or a VXX or something like that, but it does upward slope for calls. But that's a more reverting curve shape. But understanding that there's put skew in the index does help you for the breakout potential of gold. So it helps them, and they're kind of comfortable once they take a bunch of classes on skew and understand the edge. Like, you can trade flies and you can trade stuff where you can buy the at the money pretty cheap relative. So it's like some of my clients, and I mention it because they're looking at it and they're like, wow, this looks like an inexpensive an inexpensive way to enter gold right now. And normally they're not talking about it, but they are. So because we have a pretty good broad swath of people, and when they chatter about it, then it usually becomes, at least to me, it's more significant than it would usually be for an equity trader.
Yeah, when your crazies start to sink their teeth into gold skew, because I know they're obsessed with all things, volatility futures and things. So when they start sinking their teeth into all things gold skew, that maybe to me shows that there's a little bit of it's starting to resonate out there with the masses out there, which is kind of interesting. And speaking of interesting, let's look here really quickly on what you guys found interesting this week in terms of what was trading out here in gold options before we move on to some other products here. And it was an active week out here with, like I said, the futures up about 5 handles on the week. And it was the March contract taking the lead with about 32, almost 33% of the volume coming in here this week. All this week's volume coming in March. About looks like the 13 halves, which is about 25 handles out of the money here. So a decent out of the money call here, leading the dance this week with not quite 10,000 contracts, about 97 half going up on the tape. 5,000 on Tuesday. Remember, it was a holiday shortened week, by the way, listeners. So a little bit lower, a little bit lighter volumes probably as a result. But making up for it on Tuesday, 5K, 3K on Wednesday, and about 1,600 so far today. Slightly closing on that. So maybe some people with this week's a little bit of a rally, taking off some calls on there a little bit to the upside. Mr. Rockloss, before we go, really quickly, I know you got to hop off. I know you're a vol man in all sorts of products. We're going to get into equities really quickly. Do you recall the good old days of RVX, a.k.a. the Russell 2000 Volatility Index? And then you have any thoughts on what's going on in the equity or small cap vol space? Now is the time, sir. Have at it. Oh, I think we lost him.
I think he bounced. He texted. He Skyped you and said he had a split. So it's just me and you.
I know he wanted to hop in really quickly on Russell, but I think he got taken off. We'll take him off. We'll fix him up later. Get him all set up. But I know Mr. Nick. Yeah, it's kind of funny. I just find it interesting when people out there traditionally in the non-commodity space start talking about the shapes and setups for volatility and things like the precious metals. Maybe these things are starting to get a little bit of traction, Mr. Nick. I know you don't take much prompting to talk gold and gold vol and gold skew. You can talk it all day, but the rest of the world sometimes needs a little bit of prompting. And for whatever reason, Mr. Nick, seems like they're awakening to the goodness that is gold vol and gold skew right now, sir.
Yeah, I mean, I'm looking at both the 15 delta and the 25 delta quick skew thing, chart. Sorry about that. And even the higher upside calls, the smaller delta calls, they're even more expensive and much more above their average. Well, they're about the same above. They're generally higher, but even they're above their average over the last couple of years. But I would say I don't know if I necessarily agree with that standing on your head thing, because as you said prior to that comment, you and I have seen that, like you said, the skew bounces back and forth. So we see it happen, right? And we're always talking about how it actually does change the tilt. It can go back and forth, and it's just a function of where the futures happen to be more than anything else, I think. And like we've talked about, even though we're on a higher part of our range over a period of time, like we're in the 1320 range, and over the last couple of years, we've gotten up to 1360. But so we're on our, we have like a cup and saucer shape in the futures prices. That doesn't mean anything, but we're on our highs over the last period of time. So I think the bias is still to the upside, but I don't necessarily agree with that standing on your head, because we've seen I've never in the years that I've been paying attention seen the index skew flip the other way. And maybe I haven't been around that long, but gold we see flip around all the time. I could tell you exactly what times it's flipped around or when it's gotten close, and maybe not flipped where it's got the put skew above the call skew, but we've seen it where it's been balanced, right? And I'll call that a flip in the very practical sense, in that there's no skew, or there's skew, but it's equal, equally rich on both sides of at the money. So I've always said that I think this is a good market, because you have low vol. That means you're not going to pay a lot of premium. That means also inherent in low vol, you're going to get a high gamma number, which means if we do have movement, and we do have movement in the futures, you have an opportunity to trade the underlying futures against your position. So yeah, I love the gold. I wish I was more able to pay attention and actually trade more, because this is one market that I would do. So maybe when my tech times are done, that will happen. But right now, got to pay attention to quick strike.
When you're done with the day job, then you can sit back and sling the gold. And you're right. I was going to give him a hard time about that, but he had to hop off. You're right. I mean, I think maybe as an introductory tool, it's kind of useful for people who are coming to equity world to look at gold that way. But you're right. You can't do it for too long, because gold skew shifts. It changes. So if you're standing on your head, you're going to get dizzy, and B, you're going to get confused, because it's going to change. And then all of a sudden it'll look different again. Maybe it'll look like an index vol skew, and then you'll be, wait a minute, what am I doing looking at it backwards? Really quickly, since we're talking gold, I'm gonna bump up a listener. He writes in about gold a lot. Options Game. He wrote in actually this afternoon. So it looks like a reasonable whale. So I'm not sure if those two terms go together, but a reasonable whale trades 3,000 D's 2019 14 half calls in gold. Let's see if he is indeed correct. Yeah, looks like they went up today. 3,050 of the 14 halves in D's 2019. Again, we don't have, obviously, OI numbers for that. Don't know if that's closing. But that would certainly be a much more reasonable whale than what we've seen of late. Of course, there looks like there were some longer-term whales going up earlier this week. Looks like the 1,700, 1,800. Looks like maybe a vertical, 100-handle vertical, going up 4,000 times on Tuesday, opening pretty much both of those strikes as well. So maybe today is the more quote-unquote reasonable whale at 14.5, and then earlier this week was a little bit more, shall we say, traditional gold whale, where he's looking at 1,700, 1,800 vertical, so about roughly 350-odd handles out of the money for that one. Mr. Nick, any of these prints catch your eye this week, either today's quote-unquote reasonable whale or the maybe a vertical going up earlier this week on Tuesday? Any of those resonating with you?
I'll comment on the reasonable whale. That 1450 in the DC is a 25 delta call. So that's a pretty, it seems like a long way off from a price standpoint, but from a delta standpoint, it's out there, and it's inside one standard deviation of price moving forward, the December volatility. So yeah, I'd say that's that's a reasonable whale with two ends. That's what I'd say.
There you go, a reasonable whale. So I guess we agree with you. I guess we two S's on that one. I guess we agree with you there, Mr. Options Game. Yeah, he's our Mr.
Is it Options Game or is it Opt Ions Gamai?
I think.
Not sure.
You might be reaching on that one when we get Sean back on a little bit. I'll have him. I'll see if he can concur, because he's also with you, Mr. Reading into the handles. But he's on whale watch out there in gold. Whenever he sees something going up out there, he's always the first to pull the trigger and let us know. So we love our very active and attentive audience out there.
Follow Options Game.
Also, worth noting, CME hitting some records out there. Copper continuing to trade it up. Talked about it a little bit last week. A record of 12,000 contracts going up yesterday. OI also hitting an all-time high of over 54,000 contracts. So apparently the Chinese dance continuing to drive some paper out there in the non-precious metals out there in terms of copper. Let's get on over to crude here. Crude, obviously, interesting stuff out there as well. You guys, as always, can find the crude head on in to cmegroup.com/TWIFO or wherever you access your own version of the Quick Strike Report. Head on into, of course, the energy section. Click on crude oil and then WTI, and you're pretty much off to the races. You'll be seeing exactly what I'm seeing now. Of course, you can adjust the expirations if you want to see the exact report for today's show. And if you do that, you'll see coming into crude, we're seeing a little bit of a lift here this week. Up not quite 2%, not quite a handle, flirting with the 57 handle out here in WTI. So looking pretty rich, at least from the near term here, what we've seen out here in crude, where it seems like recently has had a hard time sustaining north of that 55 handle out here in WTI this week. Not so much. A lot of this coming on the heels, of course, of some information from the EIA, looking at a crude oil inventory build of about 3.7 million barrels. That was through the week again. It's a lagging indicator through the week of February 15th versus an increase of 3.6 million barrels coming in the previous week. That, of course, initially seemed like it might be bearish information. Then we also saw some news. Again, people maintain their hope, maintain their optimism for these cuts coming out of OPEC, including special envoys from Saudi Arabia heading on over to Nigeria, which some people thought maybe they were going to stray from the fold over there and not play ball with the OPEC cut. But it sounds like the Saudis got them in line. So all of that combining to continue the bullish streak, the bullish upside here for crude. And of course, as we know, as we move to the upside in the crude skew, the crude trading, we're seeing vol continue to come in. That's pretty much what we saw this week. Vol taking a nice little drubbing out here, off a handle, if not two, in some parts of the term structure out here. So a big shift. I'll let Nick break into the shift slide in a little bit, because that's kind of his baby out there. In terms of where the paper was this week, it was coming out here. Let's see, where are we out here? It looks like we're out here, and looks like that July time frame here for about 39, almost 40% of the paper coming up in that expiration cycle out there. And let's see what was lighting it up out there from an options perspective. I'm sorry, that was April perspective out here. Coming here, it's the 60 calls lighting it up. The APE 60s taking the top spot this week. Let's just do a cursory glance. Yeah, it's the APE 60s lighting it up with about nearly 7,000 contracts on the tape. The lion's share of that come in yesterday, about 4,000 or close to it on the tape. Today, pretty light, only 600 and change. 2,000 on Monday. Also seeing the APE 62s also getting some love with about 6,200 of those on the tape. Also, again, on Wednesday, so maybe a little bit of vertical action, 60-62 going up that week. Also worth noting, 64s also trading in April this week with about 4,700. So pretty much taking our number 3 spot. So maybe a bit of a vertical / funky fly going up, 62, 64, 60, or it could just be a lot of upside love in April. Either way, all of that mostly opening too on a lot of those strikes, about a couple of thousand down to about 1,000 or so on each of those strikes. So opening upside paper in April, say that 5 times fast, seems to be the order of the day out there in crude oil. Let's just scan really quickly to see if we can see any other interesting, odd, or aberrant paper out there. 50 puts in DEES 2019 lighting it up as well with about 6,000 as well. So actually 50 puts are actually coming in more like a number 3 in DEES. So maybe it's not all upside love. DEES to the downside, 50 and 55 puts lighting it up on Tuesday with about 4,500 of the 50 puts, total of 6,200 on the week, and about 3,800 of the double puts going up with about 5,000 total on the week. Both pretty decently opening there as well. So maybe some downside put spreads lighting it up out here in DEES as well. Mr. Nick, what's catching your eye out here from a crude volatility and skew perspective, and how are we looking in our shifting and sliding this week, sir?
First off, you can add Sean back whenever you're ready. I think he's available. So I'll get that out there first because I texted it to you. I don't know if you saw me. As far as, let's see what we got for the shift and slide. So futures are up this week, which is from a practical standpoint. When we look at how the shape of our crude vol curve looks, we generally have a little bit cheaper on the call side and a little bit more expensive on the put. So that means we're going to slide down a little bit and lose some volatility just by changing strikes. So in this case, as an example, the April contract is in about a vol from at the money standpoint, but about half of that is on the slide down from the slide up. It's kind of a contradiction in terms. We're sliding down the curve and up in strike, so we lose about a 5/8 of a vol just on the slide, and we shifted down by about a half of all on the overall change in volatility. So that's the front contract. So, but on the contracts outside of that, we have less on the slide and more on the shift. So I would say that overall, the April is much more firm at 22 days to expiration than the May, June, July. All those others have a much more significant shift down in volatility than the front contract. So that would make sense, right? When you have a moving market, that front contract is going to stay a little bit firmer, a little bit more bid, and you're going to see the term structure start to pick up like the front of a jump rope when you're ready to start, swinging that thing in comparison to the rest of the term structure. So I'd call crude vol soft this week with just a slight change based on the change in the strikes. So I think that it looks like as this rally continues, they're going to keep hitting it a little bit, even more so than just the shape of the curve. They're going to hit it looks like they've been hitting the vol. So that means keep an eye on it when you start seeing stuff like that. I got to say, I'm really glad that we separated this out into the report itself, because I think it makes a world of difference in understanding what volatility is actually doing, because it's really sometimes misrepresented when you look purely from an at the money standpoint. I think this helps me, and it really gets across what I've been trying to say all along about the movement of the volatility along the curve, as opposed to just a regular beat down or bid up of the vol itself.
No, I completely agree, which is why I like tossing to it on the show all the time. And you're right, it is a little bit counterintuitive to say like sliding up, right, and things like that. But we'll get it down. We'll get everyone down there on the terminology, because at the end of the day, it's important stuff out here. Speaking of important stuff, I want to get into the equities. It's been fascinating to watch what's been going on in equities land. A lot of the equities dance, like a lot of the commodities dance of late, it has been driven by the will they, won't they, on again, off again, love fest / hate fest that is the trade war. It seems like we're moving in conciliatory direction, so the market liking that. We're seeing rally ho, and most of today a little bit of a sell-off, though that sell-off seems to be mitigating somewhat. But still, in general, net on the week, we're seeing some nice upside, and also seeing vol coming back in for the most part, up again, like I said, a little bit today. Coming into showtime, we're seeing VIX flirting with the 15 handle, about 1475. And we're seeing our old friend RVX, a.k.a. the volatility of the Russell 2000, at about a 16.5. So it puts that spread right about 1 3/4 points there in terms of the small cap to the large cap. If you've been listening to the show for a while, that spread has vacillated quite a bit, up to 3.5, even 4 handles at some points. Now we're on the tighter end of that spectrum. But interesting stuff going on. Of course, our friend out there, Mr. Sean, has been gallivanting, talking to the folks out there who trade this stuff. Mr. Sean, what is catching your eye out there in the world of Russell this week, sir? Mr. Sean, can you hear me, sir? I see you on there. I don't know. Maybe I think he's having some.
Yeah.
There he is.
I pulled a Nick. I pulled a Nick on you.
There he is.
Muted my phone.
All right, so
he had to get more. He had to get more tinfoil.
He did. He had to wrap it up in even more.
Ooh,
shield.
The tinfoil.
So what's been catching your eye out of late, Sean?
I'm going to be living this tinfoil. Someone's going to call me Tin Man, like when they ask the next question instead of the Russell guy. Hey, is that Tin Man there? It's going to be one of those types of
hey, that
scenarios.
guy. Hey, Russell guy.
Maybe that's my new. Maybe that's my new call sign, Tin Man. I don't know.
A Tin Man. I don't know. I could go for it. We'll see if the listeners agree.
No, please. Let's not call me Tin Man. But again, just a really good story. The product is trading on CME Group in very high volume. As we have been touching in the last few sessions, last few shows, not sessions, but the diversification of region is staying strong. Asia's trading, Europe is trading even stronger, which means that this product is truly global, and it's really exciting to see. VIX RVX, it's gonna. I forget the word you used. What was the word you used in regards to the spread tightening and widening with the ebbs? Oh, ebbs and flows. I think was the term you used. Ebbs and flows. So we are seeing that as the markets rally or break a little bit. But I don't think it has moved that much in the last couple of weeks. But then again, as we always say, volumes are strong. Open interest is that tremendous anchor. It's over 500,000 contracts on CME Group, and the liquidity is there. So it's just an exciting story.
Well, yes, it's got to be nice when your product category is continually one of the highlights that you see CME out there trumpeting all the time. And last year it was kind of they had a mixed bag. Some products were lighting it up, others weren't. Russell, continues to be one of those growth stories. So that's got to be a nice little feather in your cap there, Mr. Sean.
It is, and trade wars, as we've talked about them being kind of insulated from the trade wars. This index is still volatile for other reasons, and it's exciting to see why there's that discussion of Skew and the downside of the options on this index. And I think I could leave the expertise to that to Nick to kind of talk about that. But trade wars is one of those things that the small cap index family is kind of insulated from, based on the domestic kind of makeup of the index itself.
Yeah, it's not stopping it from moving, though. I mean, it's still moving all over the place. Like I said, up a little bit slightly, moving up strikes a little bit here this week. Actually, net kind of unched now, looks like, here for the last few sessions with today's sell-off coming in. In terms of what's lighting it up out here, we're at about a 1570 in the Russell, and looking at about a 1570 at the money put. Pretty much is where the action is, number one out here in the E-mini Russell 2000 out there. So if you're wondering what's lighting it up out there in the small caps, at the money puts, maybe some people concerned about a little bit of near-term downside. Maybe people looking to mitigate some of their exposure either way. At the money puts where the dance is. Let's see really quickly if we're seeing similar paper out there in the old E-mini S&P 2000. Coming into showtime, we're at about a 27.66 out there in the E-mini S&P, and we're seeing, it looks like actually, yeah, it looks like a near term going away in about a day. Pretty decent out of the money paper. 2,800 calls are leading the dance out here this week to the tune of about 22,000 of those bad boys. Back and forth, about 7,000 on Tuesday, about 8,000 on Wednesday, and about another 8,000 going up today. So back and forth on that strike pretty much throughout the week here as we kind of flirt with it and then come off and flirt with it again. Net slightly biased to the opening, but not a ton. So a lot of back and forth, fast and furious paper on near-term upside. So at the money, downside in Russell 2000, and near-term upside going away in about a day out here in all things E-mini S&P, which is kind of interesting. Mr. Nick, anything catching your eye from an equity perspective, either shifting and sliding or skew-wise this week? And it could be any index you want. Pick your poison, sir.
Well, I mean, I comment on the Russell first. Just looking at the history of the skew, pretty steady, right? We haven't seen much change at all in terms of the shape of that channel or the width of that channel. So it's kind of holding course, and I'll compare that to the magnitude of the channel in the S&Ps. And let me pull that up and see what's happening. And it's not quite. You don't see the same sort of downside bid in the Russell or the upside offering, but you see it. You see that slanting vol curve, but you don't see quite how pronounced it is in the E-mini. So I'm still not 100% sure why that's the case, and smarter people than me probably have reasoning for that. But it could be that there are more factors that are going to affect the big the 500 as opposed to the Russell. Like you guys were just saying, it's more domesticated in terms of its makeup, or domestic in its makeup, whereas this one might be affected more with the international news as well. But anything interesting now? I mean, good increase in OI for the Russell from option standpoint. It's getting up there. It's continually growing. OI in the E-minis is just ridiculous in terms of the growth and the pure number, and just the volumes that are happening every day. So and the market's moving, right? You can see back and forth. I mean, looking at it today, we were up today, we were down today. So just good reason in general for these numbers and these volumes and this open interest. So 'cause people are trading the market. So I don't really have much to say there other than not much change in what the skew looks like.
What was changing this week, though, of course, go figure, the 1 week where I'm on vacation, we didn't do a crypto rundown show, is the week that crypto decides to spike and have a nice move. Roughly 10% spike out there across Bitcoin, threatening that 4,000 level. If you listen to that show, it's been hovering in the low 3,000s for a little while now, 3,300, 3,400 in that level. This week, getting a nice little lift, a variety of reasons as to why that is. All things going on in the crypto, including, it looks like recently, Mr. Musk deciding all of a sudden he likes Bitcoin and its brilliance. Maybe, I'm not sure that's worth a 10% pop, but some things are conspiring to drive it to the upside. Seeing a nice spike in volume across the board, including over there on the CME Bitcoin futures, hitting a record on the 19th with over 18,000 contracts change in hand. That's a significant jump out there. Usually we see about 5,000 a day. Remember, that's a 5X contract too. So you're talking roughly 90,000 coins going up on that day. Coming into showtime here, we're seeing those highs, that threatening of 4,000 level coming off a little bit. The futures off about 50 handles over there at CME right now, right around 38.85. They settled yesterday at 39.35. So coming off threatening that 4,000 level, but still significantly north, roughly 400 to 500 handles north of where they were not too long ago out there. So maybe, I don't know, maybe this is the case. People have been writing into us for a while saying, hey, is there a case for some long-term bullishness out here in crypto and Bitcoin? You know, certainly a lot of the near-term headlines have been to the downside. It's been breaking out of ranges to the downside. It's been threatening new lows to the downside. So a lot of those stories haven't exactly been bullish this week. Maybe fighting back against that trend with a little bit of near-term pop. You know, of course, you talked on the Crypto Rundown show recently about that halving effect and how when that halving happens out there in Bitcoin, roughly, depending on the data, 500 to 600 days out is when you start to see a little bit of a pop. And we're in that time frame right now. So maybe that's what's driving the bulls, or maybe they're deciding these prices were just too low and they wanted to bid it up. Either way, saw a nice little pop out there in Bitcoin. We'll get into more of that, of course, when the Crypto Rundown returns this Monday. Meanwhile, though, we got to keep on rolling. It's time for you guys to get on the show with a little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to your segment. Welcome to the Futures Options Feedback, where you guys get to ask some questions. Easy for me to say. Ask some questions here on the show. Let's kick things off. Jose Morales wants to know, what does he want? He wants to know, why do you like trading options on WTI instead of USO? USO can be traded in most accounts. You need a futures options account to trade WTI. Well, yes, you do. You are correct in that, Jose. But as we said before on the show, you know, that used to be a significant barrier to entry. You had to really go through a lot of hoops with most of your equity options brokers to add a futures options account if they even offered it. You had to fax in things. It's all kinds of crazy. You had to call people up, actually talk to people on the phone. It was a laborious process. These days, most of your larger options brokers have really streamlined that process. You still need to go and open up the futures options account, the futures account, but most of them have made that a couple of click process. Do you want to trade these? Yes. Click through a couple of different screens, understand a few of these concepts, and you're pretty much good to go. And a lot of them, in the UI perspective, have kind of merged those together. So it seems like you're effectively trading, you know, one from one account, even though you're trading in two things. So the UI has been merged. The barriers to entry there have gone down a lot compared to what they were 5 or 10 years ago, when it was a much more laborious process. So I'd say that latter part of that, needing a futures options account, isn't that big of a deal. And as for USO itself, we talked about this before. You know, Nick, I'm sure you have thoughts on this as well. You know, USO is just, it suffers from a lot of the issues that come from all these products that attempt to replicate a futures position in something else. You know, we see this in the volatility products, things like VXX attempting to replicate VIX futures. We see it in USO attempting to replicate, WTI and things like that, where there's all sorts of issues with the roll yield and other things coming in to negatively impact the performance of that product. So as a result, USO is not as reliable of a barometer in terms of being able to trade. You can capture some of the near-term pops, and we have seen that USO has tracked to the upside, not quite one-to-one with what WTI has done, which is, again, if you want that one-to-one movement at the end of the day, you kind of got to go to the one that brought you to the dance, which is WTI. So if you want the one-to-one, you don't want to deal with a lot of these roll yield issues and some of these other, obscure construction issues that plague a lot of these ETPs, then you got to go to the pure underlying. If it's volatility, if you want to go to the VIX, that's the place. If it's in case of WTI, you want to go to WTI as opposed to some construct that can do a reasonable job of approximating, but it isn't 100%. And the times when it doesn't pop could be the time you really need it to. So that's why we tend to take a dim view of USO. But I get you on the accessibility front. USO wins there. It's available everywhere. But outside of that, there are a number of issues, with that product. Mr. Nick, are you a USO man or not so much?
Well, it's funny that question came up because one of my customers was showing a chart of crude versus USO and the price movement of late, where there was actually some action recently, and what USO did in the meantime during that same move, and you saw USO basically flatline and the crude contract move. So again, not knowing the ETFs that try to mimic the actual futures products, I'm it's to me it feels like, just given what you said, the fact that it's easier now and you actually have something that you can follow and that's the real deal. I don't pay much attention to. I'll watch it. I would never hold it and trade it. I feel even uncomfortable doing IAU or GLD if you want to get in the metals section, because it doesn't seem to get the same action that you would in the regular contract. So I think that trading options on it is going to be even more suspect, just because you have you look at WTI and you see something happen, and you go over to USO, you don't see the same movement or the same commensurate movement, or I think that you'd be disappointed in your purchase of options. Probably warrants a sale then. But
yeah, we've seen that many times. People have written into us, well, I had my calls and my call vertical in USO. Why didn't it deliver? So we've seen enough of that too, to be another reason why we're somewhat reticent to go out there and say, hey, you should be slinging these. Obviously, if you want the one-to-one, you have to go to the actual underlying you're talking about, which case is WTI. I'm not as reticent as Nick on the GLD side. That actually holds the physical, so that alleviates some of those concerns about negative roll yield and things that USO and other products still suffer from. But yeah, I can certainly see the issue. And the barrier to entry story, thankfully, that's mostly gone away. It's much easier to overcome that hurdle. So that's not as much of a big deal going forward. We got here, who else? What's the next? Here we go. Brett R wants to know, can we hit some FX on the show? Yeah, sure, we can, because you guys ask. It's all about you guys. So if you guys want it, you don't really specify which FX you want. So I'm just going to go to the big dog here. I'm going to go pull up here the Euro USD for this week. We don't do a ton of FX because it's not always lighting up the tape, but we can certainly pull it up on occasion on demand here or when things happen. Right now, Euro USD, that's trading a little bit up on the week, up about 1/3 of a percentage point. Not a huge move, but not a sleepy town week either. Vol looks like it's coming in ever so slightly, about half a handle pretty much across the board. Not a ton of movement out there in the vol perspective. The most active contract does seem to be coming out here. It looks like in the March here, we got about a little more than 1/3 of the paper going up out there. Not in the weeklies, looks like here, but in the month March here, about 1/3 of the paper. About 4,200 is the big trade. Actually, no, it's 2. The front week contract going out in about a day has about 4,200 of the 1.145. I like to spell those strikes out. If you don't trade the FX, the strikes can get a little bit wonky out there. The 1.145 calls with about 4,300 of those going up, number one. Number two, about 1 1/8 or so, the 1.125 calls out there in the March coming in number two with about 4,100 and change. Those are the big trades out here this week. I'm looking here really quickly. Not a ton of change out here. Skew, actually, I take that back. A little bit of a change to the skew. It's like the calls are more bid out here in those March contracts we were looking at. They were about 1.2% cheap to at the money. Now they're about nearly 4%, 3.7% cheap to at the money. So the calls coming in a little bit as they're moving up that skew chart a little bit. Also seeing the puts get a little bit more bid. They were about 3% bid to at the 3% rich to at the money. Now they're about 3.6% at the money. So a little bit of evolution out there in the skew. The calls coming in a little bit aggressively. The puts getting a little bit of life out here in Euro USD. Mr. Nick, again, we don't talk FX a ton on the show. Anything catching your eye out here in either Euro USD or any other FX here for our listener? I'm blank on the name. Brett, for Brett R.
Yeah, I mean, been talking FX with CME a little bit this week, just in terms of what to watch and new things to pay attention to from a product standpoint. So you might be seeing some more New Zealand or Kiwi options information coming your way via Quick Strike, because they're starting to get some a little bit more open interest in those products. And then the other one that talk to them about, as well as some of my bigger customers, is looking for the euro pound cross-currency options. So you see the futures have a little bit of action out there, but no action in the options themselves. And I guess my understanding is that some systems can't handle the cross-currency. They're only dollar trading systems that can't handle the cross-currency systems, which is surprising to me. You would think that the trading platforms could do that, but that one, to me, I hope something happens there, the euro pound, because given what's going on with the Brexit and then what's going to happen after the fact, you would imagine that that's got to be an active pair. So I think that, and when you looking at the euro here, OI is up 5%. There's 230 plus thousand open interest. That's not a small amount. You're getting good volume numbers. So, and I think you see this, let me take a look real quick here at how the skew's moving around. I think that given the news that we're seeing in both the pound and the euro, or the euro being affected by the pound, there is movement in that. So you see the widening and the tightening of the band, and probably something that we should pay a little bit more attention to. It doesn't, I think people tend to talk about just the actual movement of the futures price themselves as opposed to the options. But you can watch. I'm looking at the quick skew for the pound, and you have seen some real fluctuation here. So as we move more towards, we saw. As there was some uncertainty, we saw the puts get really bid. The puts are starting to get offered. The calls are starting to get a little bit more bid because there's been some progress towards a more a steady Brexit. So maybe we should pay attention a little bit more and actually look for some news. Or I'm sure everybody's hearing that news, but we should at least mention the pound over the next few weeks until the exit takes place, which I think is finally at the end of March.
There you go, Brett, getting a little bit of FX love here on the show. In the future, if you want something specific, just ask for the specific product, or you can do a general product category like FX like we just did. But if you have a specific one, maybe you want the pound, maybe you wanted euro or USD. We don't know. We have to interpret what you're looking for here. So hit us up with some specifics about what. Yeah, in general, I agree with you, Nick. As this stuff starts looming on the horizon, I think we're going to see a little bit of a pickup there, and worth exploring here on the show. All right, Sean, put your question answering pants on here, sir. We got looks like a couple coming your way. First off, two-name guy, George Pete. George Pete wants to know. He says, Russell 2000 gets all the love. What about futures options on the 1,000 or the 3,000? Or maybe some of the other indices under FTSE's umbrella there. So I guess Mr. George Pete, Sean, he says he's down with Russell 2000. But what else you got on the 1,000 or maybe the 3,000, or maybe you have something else? What else is cooking up under your sleeve over there in terms of things we can look forward to on the futures options for FTSE?
The Russell 2000 is the real tenant anchor for the indexes in the Russell suite. The Russell 1000 is an index very, very near and dear to my heart. It's large caps, right? So those combined create the Russell 3000. So it's really, really all about liquidity. And I think one of the things CME Group would really like to do is increase the liquidity in the 1,000 in the futures. And once you get that liquidity up to a nice, just so strong, sustainable level, options come right behind that. So I would keep your eye on that Russell 1000 as volumes and open interest grows. You're going to see options behind those. The three. It would be kind of a cannibalization of the one and the two as they grow the one. So I would say just keep your eye on the Russell 1000 as we head forward here, because I expect those volumes in open interests to grow. Yeah,
I'm kind of with you. The three doesn't make sense, if you have the other two going out there. You can kind of, maybe it's at some point, but not certainly while you're kicking things off. And we don't talk about the one that much. You're right. Maybe it's worth keeping, as we're keeping more of an eye on FX going forward.Maybe it's worth keeping another eye on the 1,000, because we talked the 2,000. That has a lot of mind share. People know what that is. They know small cap. The 1,000 is maybe a little bit more esoteric for people out there in terms of the Russell large cap story. So maybe that's worth keeping an eye on as well. Speaking of keeping an eye on things,
it is right.
Yeah, I think so.
There's an appetite for esoteric product out there, and people like the trading opportunity in those types of products. So definitely keep your eye on that 1,000 because it is definitely being focused on and growing. So keep your eyes on it. And
speaking of esoteric products, we're going to end with the most esoteric product of them all, Mr. Nick, or Mr. Sean. Question comes from Khariton. I'll let you two dissect what that handle could be. He's asking about our old friend RVX. Was there ever a VIX RVX spread product? And thanks for the TWIFO show. Well, you're welcome for the show. That's an easy part of the question. The first part of the question, to my knowledge, Sean, I don't think there was, but maybe there was something I missed. Was there ever a spread product or even an index ever listed between the two?
There was the VIX futures and there were the RVX futures, but there was never a actual spread product. But this is one of those questions, and I've mentioned his name, and hopefully he's going to be on the show with me in the next couple of weeks, but I point you to Rick Rosenthal at CBOE because client demand will bring that back and will create a VIX RVX spread product, which I think would be very exciting for the market to see. But it's all about client demand. Exchanges are very scientific about launching product like that. So the more client demand the exchange gets, the stronger the will of them to and from a business perspective, launch such a product. But love to see that product out there. And I'm with you. I think it's Khariton. Nick, I can't come up with a derivation of that, but yeah,
I was thinking the same. Yeah. K Harry. Yeah. Nah. I don't got it. I don't have anything clever for that one.
You guys, your superpowers are fading. So maybe on that note, it is time to draw to a close. But yes, Khariton, as far as I'm aware, we talk about that on our Volatility View show a lot when RVX was trading. We were the people out there really talking about the spread. There was no product listed on it. We were kind of doing the work, doing the math, the heavy lifting ourselves. It would have been great if there was a product. We would have talked about it. Would have made our lives easier. But no, to my knowledge, there wasn't one. But yeah, if we get RVX back, we can maybe start talking a little bit of back and forth trading between the two, because that's where those two light up. When those spreads, that's why we track the spread here on the show. When those spreads start to diverge or converge is when we start seeing interesting opportunities between the two, and that's why it's worth keeping an eye on as we're going forward. Speaking of going forward, let's go back with each of our cohorts, see what's cooking, what they have coming for you guys down the pike. Let's start with Mr. Nick. Sir, if I'm excited about slipping and sliding on the volatility skew, or maybe I want to check out this new pricing tier for quick strike you're always talking about here, where should I go? What should I do, sir?
Yes, very excited. I put out a pre-tweet yesterday about the TWIFO report and our spread builder being available as quick apps, so you can get those individually, and we will have more tweets out there. I'd like to see how many followers we can get from the show that want to pay attention to those tools. So if you follow Quick Strike, if you aren't already, and you DM me with your email address, I'll set you up with a 1-week trial of the app tool so you could take a look at it and see what you're going to get. But it's going to be the same tool. Great depth. You're going to see all the stuff we talk about with the click-throughs, so you'll get historical vol, you'll get all the detailed volume and open interest numbers that Mark talks about. It's the full-on tool, and the spread builder, again, for the introductory pricing, so we don't know how long we're going to keep it for, $300 per year per tool. So that's less than 25. That's what, $25 a month basically is what it comes down to. It's annual, so we're calling it $30 a month with 2 months free when you do the annual. So pretty good deal given the depth of information that's there. And the spread builder, our spread builder gets rave reviews all the time. So if you're looking to do analysis on spreads, you got to take a look at both of those tools, and those will be released for purchase starting next weekend. So we'll have a build the first weekend of March that'll be out there, and we'll put some tweets out there and have you get ready to take a look at those.
There you go. Check it out. We'll be sure to reshare it when all that stuff goes live next week. In the meantime, you can follow him on Twitter at QuickStrike1, QuickStrike1. Well, he'll put out all the info, and of course, you can find him Bantix.com, QuickStrike.com as well. And of course, Mr. Sean, Everyone's asking all these fun products. What do you got up your sleeve over there in the land of FTSE Russell, sir?
You know, I mentioned it earlier. The volume's great. The global distribution's great in the Russell 2000 on CME Group. Keep your eye on that Russell 1000. There's going to be some opportunity there. So just watch the Russell 1000, and hopefully we see some increased liquidity, increased volume, and open interest there.
There you go. You can always find out more. FTSE Russell, FTSE Russell.com, or give them a follow on Twitter at FTSE Russell as well. All that data you guys are asking about, they put out stuff about it throughout the week, so give them a follow there as well. And of course, our friends over there at CME Group, you want to get the latest Eric and Blues and everyone else's research and all the good stuff coming out of these volume numbers and things, head on over to CMEGroup.com to learn more. And on behalf of myself and Nick and Sean and our friends over at CME, I want to thank all of you out there for downloading, streaming, subscribing, and all the other fun stuff that you guys do. Keep it up, and we'll see you back here next week for more of This Week in Futures Options.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.